The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Tuesday, the 13th of September, and we're looking at the Dow. This is a much deeper decline. Well, let's just go to that right now. This morning, the futures were up almost 300 points, and now the actual Dow itself is down 710 at 31,675. It has more than filled in the gap from Wednesday to Thursday of last week. That would be Thursday to Friday. That would be Monday. Yeah, Thursday to Friday. And that CPI number, which was very high, that really just put paid to any chance of continuing the rally. What's really important is how does the market unfold over the next, I'd say, all of today, all of tomorrow, and into Thursday morning. That's going to be key because these sudden smashes to the downside very often are emotional, and then there's some kind of you could call it an overextension of that particular move, and then it kind of ameliorates, it comes back, and we come back a little bit. Still don't make new recovery highs in this particular instance, but we come back quite a bit. We don't know yet. The day's young. We did get in the 10-minute chart a peak D in the Chapman wave methodology at the high that was made at 4158.00, and that was at 8:30. What was it? 8:40. Starting 8:30, going to 8:40. And now we're making lower lows and lower highs. And that basically says that the move over the last, and this is going to be very interesting because for subscribers to my opening call, you remember I spoke about this. I said that we're still holding our short position in the Dow. It's almost a separate position. That's more an intermediate term position, around about the 33,300 area, short via the DOG. And but we did go long, almost at the bottom, the DIA. So they separate positions completely. So now the DIA has a stop. If it gets taken out, it gets taken out. But the bigger picture said that we aren't done yet with the corrective formations that we're looking at in the charts, and that the bigger picture said it's at least prudent to have some kind of insurance. Basically, that's what we're looking at. I had a question about the Chapman Wave Chin Gauge. That's Richard Arm's short-term trading index. I use it just based on numbers, and that hit 4.20 today. That's pretty high. Actually, let me show you something very interesting. In this particular instance, and I'm going back here, it failed yesterday, having had a very low reading on Friday. There should have been, even if there was a rally in the futures early on, there should have been a slide to negative in the Dow before rallying, but that didn't happen at all yesterday. So that's a failure. But you can see from these here, there's a failure. That was at 36, I think it was, back on the 18th of July. Very seldom does it fail, but it does fail. But mostly it has over a 90% accuracy rate, and the one that has the very high reading has a very good accuracy rate, and say within 2 sessions there should be a very sharp rally in the S&P futures, and then you're kind of on your own. So it says you could short, but you got to be careful because it could be a rally, and just really it's more a timing methodology. Now what's interesting in terms of the patterns that we're looking at is, as I said to subscribers to my opening call this morning, the 120-minute chart made a peak D, or it went to a leg D, and then pulled back for three sessions, and look at this big move to the downside. Underneath the 200-period exponential moving average of 200-period moving average of 32,602. And now we're down to the 31,653 level, and that's just saying, look, the MACD is still good. Stochastics are still pretty good at 83%. The 9-period exponential moving average is still above the slower moving average, 14-period. So there's still some internal strength. All right, so now let's go back to the story that we want to go through. Let's go one at a time. INDU, the Dow, at this particular point is down 728 at 31,652. This kind of peak A, I call it a gray peak A because the stochastic never went above 80% to give you a buy signal upgrade to a buy mode. The MACD didn't cross positive. In fact, is now deflected lower. The 9 period never went over the 14 period. So this was a counter trend rally that we were dealing with. And the weekly chart now, instead of if it was closing at today's high earlier on, that would be fabulous action. This is unfabulous action. So the Dow is saying that keep your eye on that monthly chart because the monthly chart was improving so much. Early this morning, let me just show you. Let me go to the YM, which is the futures. Look, the Dow futures, which was up against the 9 and 14 period moving averages in the monthly chart. That is really good action. Oh, the MACD is terrible and stochastic still 31%. But that would have been a good sign. So good signs can change very quickly. We've just seen that. Looking at the S&P. The S&P is now under the 9 and the 14 period exponential moving averages, fill the gap Thursday into Friday. And what's even more important is that that weekly chart has gone back to just a so-so chart pattern. And that monthly chart, well, the month is still young. We don't want to get into that. QQQ, NDX 100, trading down 10 at 300.10, down 3.43. So it's a worse percentage decline than the S&P. But actually, the weekly chart is still holding pretty well. We do not have any position in the QQQs. And at 299.92 level we're looking at right now, if 296 gets taken out over the next 2 days, that's going to be really ugly. If there is a late rally doesn't mean a thing unless it's a 299, unless 303.50 is taken out as resistance. Let's go to the IWM, the Russell 2000, and that's pulling back. It doesn't look quite as bad as the others, and that's very interesting because the daily chart has been holding pretty well at times, but it's still a very weak index. It's down at 470 at 184.98. Now let's just get to this. So the gold contract it's come back off the low. The low so far today is, let me just move this out the way so we can talk about the low, 1706.7 on the continuous contract. It's up 8 points above that, 1715.3. But as I said yesterday, this is okay action. It should be much, much higher. So gold is doing, let's say it's doing okay. Let's just see, ASA is the stock that we often go to just to check out. Let me get to that. ASA, it's ASA Limited. This is gold and precious metals. Pulling back 35 cents to 1406. It's really not bad action. It isn't great, but it's definitely not horrible. If it starts to trade under 13.70, that becomes horrible. So, as we say, and not only that, look, the left side low that was made in ASA precious gold and precious metals, that low that was made back in June. In a sense, that's a good sign. I'll be back in a moment. I am anticipating some kind of an oversold bounce, and we'll see if we can get that timing right. I'll be right back. Basil Chapman, Tiger Traditions Hour on the 13th of September.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back and we're looking at the Dow, still very weak, down 705 points, just attempting to, let me just see if we can do some work here with a very short term. Here we go, very short term. Let's get out of that. That's a leg C, maybe a trough C in the 10-minute chart, but we need to get to the 1-minute chart to really fine-tune this. Let's go to, so this is peak A, and this becomes peak B, and this is a leg C. So questions came in, is this a time just to try to play for a bounce? It's very difficult because a lot of people were completely taken by surprise by the depth of the decline. And that means that you've got a number of people now that either are looking to short or maybe looking to buy, but they won't believe it at first. So I suspect there will be a rally attempt and then another decline, and that's the decline that really needs to work on the upside. So if you're thinking of the E-mini and you're thinking, what can I do down 100, just right here at 4,009, make it a real tight stop. You could have a little nibble right here, but I think it's work that needs to be done. What you have to see is, look, the MACD is good, stochastic's rising at 61%, on balance one is rising, it's not great. And the 9 is just this very moment crossed over the 14, but it's a 1-minute chart. We have to wait for the whole thing to complete. So this is exactly the point where I'd say you can take a little bit of a position. Don't get carried away because this market, as I say, a lot of people missed the actual depth of the decline. So if they were long from yesterday, they're busy sorting out their positions, etc., and maybe it's a little early in the day to say, now we can have a really good 30 to 45 point rally. But I've got, from the patterns that I'm looking at, I would not be surprised if a tremendous amount of damage was done in the first, it's not even an hour, in the first 30 minutes, let alone the first hour. So that's the way I would look at it. And to tell you the truth, it's the best way to do this is to not add or subtract or anything. You just take a position and you see what happens. And it could be one of at least 2 or 3 positions taken out over the 6 hours or 5.5 hours left today. So that's the way I would look at it. And meantime, would I look at the short side? It depends on how far we can bounce. So a question came up. Let's see, where were my questions? Okay, there we go there. Yes. Basil, how did this affect the IYT? IYT is the transportation index, and you can see that was a pretty sharp decline. We had a fabulous rally. Look at this. You're down 4.81 at 233.26. But look at the rally that went almost to the 200-period moving average and then just got knocked down today. And all these gaps get filled, but they don't necessarily have to get filled right away. Most importantly, what you want to see is 233.26 on the IYT, iShares, Dow Jones Transportation Average Index Fund. And what you want is to see it close near the high of the day, and tomorrow to have a little bit of a pop-up, and then maybe pull back a little bit, scare everyone. But if by Thursday the IYT is able to get into the upper part of this candle from the 9th, that's Friday, which was at 235.84, and the low was 233 and 233.06. If we can get anywhere into the 234.80 to 235.20 area, it says, okay, maybe we get something back. That's the IYT. Weekly chart is okay. Monthly chart actually has held pretty darn well when you think we've had a whole year, 8 months of double topping and then pulling back. This is not such a bad pattern at all. Okay, now other question came in, and I wanted to do this. Look at the TLT. The TLT is trading at 106.54, down 88 cents. Look at that. Look at that candle. Trough, a leg G to C, parallel alternate count. And it's done the cup. It's trying to get a cup formation here after that dreaded H takeout of the left side low. And this is just saying yields. I don't see how the yields can really start to decline at this particular point. We might be getting close to some form of basing action, but at 106, when you're at 179 in March of 2020, hey, that's terrible. And that's just saying, I haven't shown this chart for a couple of days, and since I was away, I didn't do my weekend overview, about a 45-minute to an hour overview. Let me do this right now. There we are. So there are three. This is a triple yield chart. Let me just check that out. Oh, triple yield chart. It's white for the 30-year, brown for the 10-year, and cyan is the 5-year. Look at that. About to test the 34.72 high. Remember, we spoke about this, the cup and the handle pattern. And look what it's doing to the other indices. I'm going to go to Bill in San Juan. Bill, how are you?
How you doing, Basil?
I'm doing well, thank you. You'd like to look at?
I'm sorry, you broke up. Say that again.
You'd like to look at?
Please, ADTX.
Okay, ADTX is, let me check that out.
Microcap biotech. I swing it from time to time, and there's been some volume coming in, so I figured have you take a look at it.
Okay, so ADTX is, if I can find it, Addixt Inc. Okay, as you said, it's in the microbiocap area. I've been looking at many of those. They seem to be, some of them are starting to show some support again. This one had a fantastic, do you have a position in this?
Yes, small. I nibbled on some yesterday and this morning.
Okay.
Just a starter position.
Okay, so it's trading at 0.1698. Now, the big problem with stocks these are like pink slip stocks. These are trading, we almost have to book an appointment to get these. The problem is that they move so quickly in such big percentage gains. Look at this. Yesterday it hit 0.25. Was it 25? 2488. And this morning's low is 0.1521. So think of this as 25 going to 15. Those are huge percentage declines and big percentage gain because it was at 0.12, I think it was. Yeah, 1245 on the 7th, and it screamed up to, 0.2488. So I'm going to do a little bit of work on this. Can you hold?
Go. I can hold as long as you need, Basil. I appreciate it.
That's great. That's wonderful, Bill. So we'll be back with Bill and San Juan looking at ADTX, and we'll do an analysis and be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here. We're on with Bill and one Editex Inc. That works on the immune system, trading at 0.1770. Oh, it's had a little bit of a bounce as we're talking. So you've got your positions, but I don't have to tell you that these are extremely volatile, and it's right in the middle of its volatility stage. But I like the fact that it's gone into the lower band of the rectangle formation in the daily chart. That doesn't mean to say it immediately will rally, but it does say that it's trying to form a base of support in the 1.4 area, in the 0.14 area. So I'm not going to recommend that you add to the position. You already have, you say 2 positions, a little bit yesterday, a little bit today?
Yeah, I'm buying a little more at the moment as we speak. But you're right, they're so volatile. What I usually do, Basil, is I stagger my my sell orders. That way, when they have these spikes, my orders get filled. I learned that the hard way.
I know. We all, it's funny how much we pay for our tuition, huh?
That's it. So, money well spent, though, right?
It is. If you learn something, absolutely. So I like the fact that it's in the low range. It's up just a little bit it's up 3.29%. Of course, it's such a tiny stock that it's easy to go up, but it's also easy to go down. I like the fact, and I think you've got your trading plan. So the only thing I would say is that if it closes for 2 days underneath today's low of 0.1521, then there's a chance you're going to have to wait just a little longer before it actually has this bounce. But if by tomorrow it's actually going into the 0.193 area, that's going to be really good. That's exactly what you want. And then you'll be able to deal with it after that, because you'll be able to put in your sell positions, knowing exactly what's going on. I don't know if that helps you. Oh, the other thing I wanted to say is that this kind of rectangle, and it basically from June, it made a high of 0.35-ish, and then it dropped down to the 0.12 area within a week and a half, and then it had a big spike back up. The fact that it keeps spiking up there, even though it fails, says that you should have a chance to be able to get out with a nice profit. I like to look at the character of the stock, and the character says every time it gets back into this particular lower range, it tries to use it as a springboard. And I think you're looking at that as well, correct?
You're on the money as usual, Basil.
So I'm going to wish you good luck. This is not for the faint of heart. This is not for everybody listening, but I think you've already nailed your position and how you chopped. Now it's up again. It's up 18.88, well, 1.85. Very nice. So just strap your seatbelt. That's all I can say.
Rinse and repeat. I appreciate your time, Basil. You have a great week.
And you too. Thank you so much for calling, Bill.
Thanks.
So a couple of things, questions came in. Is this now, the question has been for a while, is this the time to get into Amazon? So I had said earlier on that only as not even a starter position, but as a feeler position, when it was trading, I think it was at about 135, then it went down to 124, then it popped up to 135, 136 yesterday. Today it's at 129. I still don't think it's ready for the big entry point. So I'm going to say just stay with that little tiny position that you've got to get to, as I call it, a feeler stock. It's just to get a real sense of how, look, Amazon's down 7 at 129.39. It's down 5.16%. Well, that's way more than the Dow right now. It's way more than the S&P. So it's not acting as well as it should. So I'm going to say, based on everything I've looked at I can't really call it fundamental. It's just observation. That's all I can say. Based on observation about Amazon and what I'm looking at in the general market, I think Amazon still needs a little more time before it really starts a decent move to the upside. So just that nibble to get a feel, but I wouldn't be adding to it right now. So that was Amazon. The other, Apple. So this is going to be very interesting. I wonder if I can do that. Okay, I'll first go to the daily chart, AAPL. So Apple went right to the Chapman wave inside track repellent zone yesterday, and then it pulls back. And it's now pretty much filled the gap from Friday to Monday. The gap up, now it's filled it down. I would put Apple in the same category as Amazon, but I think the chart pattern is way different. I think the chart pattern on Apple is way more constructive than Amazon. And as a result, I would have a different modus operandi with Apple. So the question came in, where would I have Apple? I have Apple. Where would you add? And I'm just going to say right now, I wouldn't add. You see this red candle right here, how it's filled in the gap? Well, if today, there are a lot of ifs, but I'm just saying if today wasn't this huge decline and it was an inside day, I'd say I think Apple's acting well and that it should try for the 165 area. And here it is at 157, down 5.80, down 3.5%. That weekly chart is holding very nicely, but the arbiter of a trend is price. And if Apple in the next week and a half starts to trade under 151, that is going to be very negative. It's at 157.61 right now. So I'm just saying, I don't see any rush to get into some of these stocks, especially the very big heavies like an Apple or an Amazon. There's some other things that we've done. For instance, where can I go to? Yeah, so we got stopped out of TAN, which is Invesco Solar Energy ETF. One of the reasons is I did some work the other day, and I really loved, you remember on my show, I got a question about First Solar, and I did some work, and I said, it's looking really good. And then I think it was Jacob actually did Tom O'Brien's show, and he started talking about the same thing. Well, I liked to be more generic here. I didn't really want to I didn't want to spend $138. I wanted to spend $80-something. So we got TAN. We just got stopped out for a small gain. But I think that this is the Invesco Solar Energy ETF. I think it's going to be in play. So I'll be looking for some kind of a pullback to maybe re-enter. And so we had a long at 86.91. Let me just see, it's 10. And the stop was 84. Wait a minute. Oh, no, we actually took a loss. Sorry. Oh, right. We raised the stop. No, we took some off at 89.31 and at 91.13, I said. 91.13, was that yesterday? It never got there. Okay, so we took kind of alleviated some of that. So we took something off. So I think that it's a peak B in the weekly chart. It's got a Chapman wave falling X formation. Is this something that I would just go whole hog right in? No, I treated this the same as everything else. I'd have a fairly tight stop. You get taken out, you get taken out. You don't have to be messing around. Look, the monthly chart says it's trying to make a cup formation. The weekly chart says it's got the Chapman wave falling X formation. If it trades at any point in the 91 area, it's at 87.66. In the next week or two, that's very positive. That's TAN, Invesco Solar Energy ETF. I'll be right back. Dow's down 103. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. Dow's down 827, just relentless selling going on. And there's also the speed with which everything changed. So a question came in about Uber. I did answer in Discord, but I'm not sure that you actually got it. So I'll just do it now because a number of people asked me about Lyft and Uber. And I must say, when I'm away, I still haven't got into the Uber thing. I haven't really once been into Uber. I get a cab, very old-fashioned. I thought I had it all organized, but I didn't. I will get it organized. It's obviously a means of transportation that's very important. But so Uber is trading at 30.72, down $1.78. This 200-period exponential moving average of 31.26 is like a magnet. And I suspect it's going to be hovering around this magnet for a little while. So the only thing I would recommend is, yes, you could just nibble right here. And it's trading at 30.75. If it manages to get to 31.28 at any point in the next day or so, maybe you can add just a little bit more because the technicals already, it looks stochastics at 89%, the MACD's turned positive, the 90's over the 14. So far, this is in play. And if you think about Uber in terms of the economy, I don't see why they should be lagging at all. They're viable. So yes, I do like it. Do I like it for a very big move to the upside? Not yet. But do I think of it as a trade or maybe starting a position, getting a feel for it, letting it go, maybe if it holds? Now, the whole thing about this is at 30.77 right now. If it closes under, I'm going to be a little bit broad with this, 29.29, which was the low of the 8th of September, then it's kind of stuck, and that 200-period moving average is going to become very strong resistance. So I'm inclined to say you could nibble on it here because it's going to, the price of Uber itself is going to tell you whether it has the gumption, whether it has the energy to break the resistance level, both from the weekly chart, which should be right here, going to that resistance, and if at any point it can go to the 32.30s, then the left side high, the doji candle high of the 12th week of the 12th of August of 33.36 becomes a target on the upside. I think it's going to be struggling for that right now. So would you be missing out if you didn't buy it and then suddenly it spiked higher? I must say I'd rather be buying strength than buying weakness. So my gut feeling, based on the technicals, is to say I wouldn't get too carried away. If you want to just nibble right here and see if by tomorrow there's a rally of that is sustained. That's all I want, is a rally that's sustained into the close. It doesn't tell you where it should go, it just says sustain the rally rather than have weakness and close at the lows. that would be what you want to see. And if you're looking at the weekly and if you're looking at the monthly, the Chapman Wave inside track repellent zone is saying, wow, to break above, especially on a weekly basis, you really need to see 33.45 to 33.65 on a closing basis. And that'll say, great, that's the first time Uber has been able to break this very strong resistance line. So I hope that helps you. Next question is, let's see, okay, over here. Yeah, so you had mentioned, Basil, you had mentioned the cyclicals the other day. Could you just follow up on that? All right, so this is what I'm going to do. So U.S. Steel had a red candle yesterday, and now it's even lower. It's trading down 81 cents at 23.12, and that's just saying it ain't ready for prime time. Caterpillar has very much the same kind of pattern. It's in a rectangle formation in the lower part of the rectangle at 186. Any week where you see a close above 193.50, that'll be excellent action. But until then, I think you got to be very careful. Yeah, one of the things is the reason why we have fairly tight stops is I don't want to be. We raised cash. We did a lot of things right. We managed to get the lows. We didn't get carried away. Remember I said, I'm not prepared to get the 3 times long positions. We had them before, and they were fantastic. This is not the time for it. We're still holding the short Dow plus the long Dow. This is just a time for individual stocks. And you can see that based even on Caterpillar, look at Deere. And Deere, of course, is in the agricultural side. It's a little bit better. It's down 740 at 366.63. But it's really not a great pattern. The pattern says that the 355 200 period exponential moving average in the dreaded H pattern is probably going to be tried for and hit. The other thing is, where was it? So I had a couple of stocks. These are very low price stocks that we sometimes have in my Traders Corner. These are stocks that are single digit, and I call them screamers, because if we're able to get them correctly, they can really fly. Well, there are a number of stocks that look very much like this. They just kept going higher and higher and higher. This is CEPU. The stock's called Central Porto SA. There it is. Operates thermoelectric plants, transmission, distribution in Argentine. Had a really nice weekly rally. It's actually looking pretty decent. Leg D in the monthly chart. They just made a peak E. So these are the stocks that I'm looking at here for subscribers as a potential, just quick trades. We try to get in, and as it rallies, if we write, as it rallies, we take little profits off. If we can still keep a core position, that'll be great. That was one. Another one is, I haven't looked at this for a long time, ZETA. I think this is a biotech stock. I might be wrong. ZETA is Zeta Global Holdings. I don't know if it's a biotech. Look, holding at the 200 period moving average, down 35 cents, down 4.43% because it's such a low price stock today, but actually holding pretty darn well. Trying to use that 200 period moving average as a magnet. So these are the kinds of areas that I'm looking to explore a little bit more, because within the context of the overall market, a day like today just is far too depressing when you had positions that were doing extremely well, and then boom, in one day, there's a sharp drop off. Here's another one. Look, this is not a screamer. This is the IBB. The IBB was trying to do well yesterday. That's the IBB is the NASDAQ Biotech ETF, trading at 124.36, down 4.30. And you can see that, okay, well, let me talk patterns. You see this peak B in the weekly chart, and it's come back to the 200 period exponential moving average. The MACD is good. The 9 is still over the 14. The stochastic is weak at 64%. On balance, the volume is not very good. And this is just saying, watch out for the arch formation, because if IBB takes out the low of last week, which is at 119.31, and here it is at 124.27, already down 4.38. It says, uh-oh, this is not an area that's going to benefit from this particular market environment. Okay, so the other thing I want to look at here, question came in, crude oil, what's your opinion about crude oil? I think crude oil is stuck in this range, in the lower range. Remember, we're talking about, what was it back ADTX. So it has the same thing where it's going into the lower part of the rectangle. It's gone once below. We'll be watching this closely. Crude oil is down $1.76. Is that because we won't be as much as we?
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, folks, I was asked if I would look at the SQQ, and that is the 3 times short the S&P, the SPY. It made a peak E in a 1-to-1 exact, beautiful left side, right side price time match in the Chapman Wave, plus the Chapman Wave inside wedge target resistance line got hit exactly. Then it pulled back very sharply. It went from the 48-ish area down to 40, and now it's trading at 45.16. That's a 12% move. That's a big move. And it stopped right at the 200-period moving average. How it deals with this 200-period moving average in the daily chart is going to be very important. If it pulls back and then just pops up through maybe 46.30 and then comes back and retests the 45.19 level, that's just going to suggest most of the damage has been done for now, and then we're going to just chop around for a little bit. But if there is a follow-through at the end of the day going into tomorrow, you can't have a reversal to the downside, just a follow-through weak session tomorrow morning, that 46.50 area is going to be important. It gets to about 46.50, it says, uh-oh, there's a chance you could retest that 48 level, That's the previous high. So this is very important for a number of reasons. The most important reason at this particular point is that it did complete a peak E. It did pull back very sharply, and this is a rebound. How long does the rebound last is going to be the issue. Okay, now a couple of things that we wanted to look at is the HOG. Haven't looked at this for ages. Harley-Davidson motorbikes. Not a bad session today, down 93 cents at 41.78, down 2%. But closer towards the upper range in the 40 area to 42, and it's broken out in the monthly chart, and it's gone to peak A, peak B, a leg C in the weekly chart. So I have to tell you, there are some areas that I've been kind of impressed with in terms of the way that they've been holding. And although I hadn't looked at Harley for a little bit, I like what I see. That doesn't mean to say to buy it. I'm just saying it's holding much better than many